yeah, if pest control truly is non-discretionary, then it probably shouldn't be that impacted by a K-shaped dynamic. Like rich or poor, if you have a bug problem and you know you're not going to be able to handle it with some DIY product at Ace Hardware, like you gotta make the phone call.
Hello and welcome out to another episode of the PNP Industry Insider Podcast, where we take a look at what is changing in the pest and lawn industries, and we take you to the front lines to those who are driving those changes. I'm Donnie Shelton, owner of Triangle Home Services, which has Triangle Pest as well as Triangle Lawn. And with me is Pest Control's hairiest accountant, I might add, Mr. Dan Gordon. Dan, would you like to say good morning, introduce our topic, our guest, yourself, our sponsors, and I think that's all.
Okay, I'll take 10 minutes to do that. Here we go. Dan Gordon, PCL Bookkeepers and M&A Specialist. We specialize in CFO work for the pest and lawn care industries, as well as exit planning. So let's talk about, according to the notes, I need to talk about our guest first. Our guest is Tim Mulrooney from William Blair, and the topic is what's really driving the pest market. So now, stay tuned while I go through the sponsors. Okay, first sponsor, Coalmarch. Coalmarch Marketing works exclusively in pest and lawn industries, drives measurable, smarter growth for your business. Head over to coalmarch.com/podcast and fill out the form to get your free first month. And for 40 years, PestSure has been protecting the pest control industry with specialized insurance and safety programs because nobody understands our industry better. Learn more at pestsure.com. Voice for Pest. They deliver the only AI-powered phone solution specifically designed for pest and lawn professionals. Go over and visit them at voiceforpest.com/podcast. And one of our favorite distributors, who is absolutely awesome for the industry, is Forshaw, leading family-owned and operated distributor serving pest management professionals since 1961. Visit them at forshaw.com. And our newest sponsor, we are so proud to have, is PestPack by WorkWave. Running a pest control business means juggling a lot, from schedules and routes to billing and customer communication. PestPack brings it all together in one platform. Learn more at pestpack.com/PMP Industry Insiders. Yeah, that's right. And how am I doing?
Not great.
Yeah, well, no, I was doing well up until that point. I got a little caught up there. Peer groups. If you're interested in one of our peer groups, and we actually need to do a little experiment to see how much people have grown since they joined our peer group, because it's pretty impressive. So if you're interested in that, go to pmpindustryinsider.com/peer groups. And the conference of all conferences will be December 15th and 17th in Raleigh. Visit us at pmpindustryinsider.com/conference. That's going to be a cool conference.
Really
maybe we'll invite Tim. So if you want to come,
Hey,
Tim.
Raleigh's a cool place. Just saying.
Yeah.
Yeah.
Let's get started. So today we welcome Tim Mulrooney back to the podcast. Tim is an analyst in the commercial services sector for William Blair. We together, Tim and I, publish or I provide him data. He publishes it, the Pest Index. And the Pest Index tracks monthly performance in several different U.S. pest markets, including residential, commercial, and termite. And I'm sure we're going to talk about this, but the correlation to what's going on in the industry with this pest index is
hang on.
Absolutely incredible. But go ahead.
But before we get going, I actually have a really funny story to tell.
Oh,
you're talking about the conference, the Insiders Conference. You're talking
Yes.
about Tim. I will never forget this as long as I live. So I was at CO2 and I was doing a presentation. This was back when companies were starting to get noticed by private equity and like the pest control industry was changing. And I did this whole presentation and I actually start quoting Tim. Like I'm actually like going through some articles that he had wrote, and I'm like, look at these guys. Like they're like looking at our industry now. And like, and then after the conference, I was like, I actually know that guy. And I was like, get out of here. Because I mean, listen, Dan, give me a break. He doesn't know that many people. But
I know.
anyway,
I'm a big
and
swinger.
little did I know later on, right? It was hilarious. So anyway, Tim, welcome to the podcast. I do value your opinion, and it's just hilarious to me that here we are talking about doing another conference. But my introduction to you actually didn't come through Dan. It came through reading some of the articles that you're writing about our industry because I thought it was interesting at the time that we had been found. So that's all. So welcome.
Yeah, thanks for having me, guys. It's fun to be back. I had to wake up there for a second and have some coffee after Dan's 10-minute preamble there, but it's good to
Actually, you could have slept through it. You probably would have got some good REMs.
I
But
probably would have, but it's good to be back. It's cool. We have this, tech now. We're just on Zoom. This is super easy. I remember a couple years ago when we did this, I'm pretty sure I was like hunched over in a hotel room somewhere on my cell phone. Rental Kill had just closed on Terminix. There was all this stuff happening. We were at Pest World. It was,
We were in Boston. No, we were in Boston. I remember it because I was in this
yeah.
chic hotel that was just terrible. But anyway, keep going.
No, that's okay. I was not in a chic hotel. I was in a different kind of hotel, but it was it was a long time since we've done one of these, and I actually was just looking back too. It looks like I was your second guest on episode 2, all the way at the beginning. I don't know if you guys
oh,
Wow.
remember
didn't
that.
know that.
Yeah, I went back
Wow.
Wow.
and looked just before this started, and episode 2,
Where are we at
impressions.
now? Like 280?
Yeah, can you
Yeah.
believe it?
Yeah.
Unbelievable.
Number
Wow.
Yeah.
two. Now
That
you know,
Donnie,
I
he's such a rock star.
I
Well,
don't know,
you
man.
guys are going strong. I'll tell you this, episode 282, 2 episodes ago, that HR update on non-competes and other factors, I thought that was very good. You guys are still pumping out good content every week.
That's
Well,
good.
it's
Well,
not
that's
us, it's
Gene
our
C, right?
guest.
She was awesome. Yeah.
I don't know. You're
We
right.
just tee it up and hope that it goes well, you
Right.
know.
Exactly. So,
But
all right.
let's go with
Well,
the questions.
let's
So
get
you
to
want
it.
to go ahead, Donnie?
Yeah, I was going to say, so you spoke at the PCT Top 100. And of course, Tim, obviously you kind of became I mean, for lack of a better word, you've become our industry analyst for the most part, but you spoke at the PCT Top 100. What did you talk about? Can you just kind of give everyone who's listening to the podcast an overview of what your topic was on and kind of where your thoughts went with it?
Oh yeah, sure, Donnie. They asked me just to come speak, give an industry update. And Um, our our topic though, so I kind of balanced it against two factors, like what are the underlying drivers of the industry and why I think the industry is going to remain strong for a very long time. And I balanced that against also like what are some of the short-term factors and things to be, risks and things to be aware of as a pest control operator as we are entering the second half of 2026. This was before Rollins reported, by the way, the results. But we're kind of seeing in our pest index, which is such a handy tool for me to have, we kind of see the monthly trends rather than the quarterly trends that are reported by Rollins. So, Dan and I were seeing these monthly trends that were kind of pointing to a little bit of, I would say, a little more headwind than we were used to. And so it gave me the ammo to then go out and reach out to other pest control companies, some of the large regional ones that I have relationships with, and ask them, hey, are you seeing issues? And some of them were like, you know what? We kind of are. And so
Mhm.
then that made me think, wow, okay, let's go figure out what's going on here. And so we presented, first of all, on why the industry will remain strong for a very, very long time and pointed to the fact that the pest control market grows at a GDP plus rate. And where does that plus come from? Some demographic factors, um, some factors around insect activity and population growth. And there's a lot there that I'd be happy to get into, but I also don't want to bore you. But the point is like, hey, here's why the pest control market's growing at a stronger rate than a lot of other markets that I cover, by the way. Um, and then we got into some of these near-term headwinds and what could those be? Is it weather? Is it a softer consumer? Is there something changing in the digital channel? Is competition heating up for some of the bigger guys? There's a lot of question marks out there right now, and we just explored some of those ideas at the conference. It was really fun.
You know what? That could be a whole episode itself, but I'm gonna
Yeah.
wait. So
I'm
Um,
really interested to hear what you guys have to say about some of this stuff. I'm sure we'll get into it later, actually, because Donnie, I mean, you run a pest control company, right? And Dan,
I do.
you see pests, you talk to these guys all day, more than I do. Like
We see
I'm
their
actually,
numbers. Yeah,
yeah,
we see their
Yeah.
numbers, and kind of interesting. We kind of, that pest index was running around 10%, and then it dipped down to 6% or so, and so we saw some issues. But who knows why? I felt like it was weather related. Just so that you know, the pest index I got, because Tim had nothing to do this past weekend. I sent him all the numbers so he had to
yeah. Thanks for
create
that, by the
the
way.
the index, and it seems to be rebounding. It's not where it was, but it seems to be rebounding, which I don't know, Tim. Could that support the weather theory that I have, or is that what do you think on that?
It could, but it doesn't necessarily.
Right,
So it could be. See, this is the problem we get into. This is, by the way, why Rollins stock is down so much because there's too many coulds out
right,
there. We need to
right.
start getting some answers, and we don't have them.
Mhm.
Yes, it got warmer in the second part of June, and Rollins said things picked up in the second half of June. They said the first half of June was soft, like May, and the second half of June was better. Digital leads picked up, and that carried into July. That kind of coincides with the temperature patterns that we saw across most of the United States and Europe, where things warmed up in the second half of June. So yes, maybe it's can be explained by weather, though um, you know, when you go back to May, May was really bad. Like digital leads were down double digits, not just for Rollins, but for other companies too. They fell off a cliff. May weather wasn't awesome. It wasn't really that bad either, temperature wise, across the United States as a whole. Like if you look at national average temperatures, it was a little colder, but not, I just don't think that it fully explains everything. So while our June index improving is good news. It's still kind of below the average that we'd like to see. It still indicates softness, but it's better. But yeah, I still struggle to explain May with just weather alone.
So let's talk about the overall economy. You think maybe some of that has, is it the competition? Is it the economy? Let's talk about this K-shaped curve that you and I had brought up.
Well, first of all, we need to define that, like
Okay,
what a
yeah, what's the
K-shaped curve
K-shaped
economy
curve?
is. I mean, because I know for me, like I understand it, but I want to hear Tim's
Yeah,
definition because it
yeah.
would be better coming from him than from me.
Yeah, thanks, Donnie. I mean, the idea behind the K-shaped economy is, folks above a certain income threshold are doing fine, and folks below a certain income threshold are actually doing worse and worse and worse. And this is a more recent phenomenon because we would say, well, yeah, but that's been happening for 50 years. That's just capitalism, right?
Hmm.
But like
Hmm.
what they're really referring to here is over the last couple of years, as inflation has gone up, inflation on regular goods and services, which for someone with more money might be 5 to 10% of their budget, for someone with less money is actually like 20, 30, 40% of their budget. So the big inflationary pieces like groceries and gas and other things, when inflation goes up in those categories, it really hurts people that are say below $100,000, or I don't know, say $80,000 or less in income, family household income. And so there's a K shape that shows up where people towards the lower end of the curve are we're seeing their spending patterns get worse and worse and worse, and people at the higher end of the income bracket, they seem to be less impacted or doing okay. And also, by the way, those are the people that are heavily invested in the stock market, which continues to go up and makes them feel like they're okay. Even though it's just paper gains, they feel wealthier, and so they're okay with spending a little bit more. And it gets you to this situation where the a big part of the economy is being driven by and held up by a relatively small piece of the population.
But they are producing the vast majority of the wealth.
You got it. And paying the vast majority of the taxes. Yes,
Right.
correct.
Exactly.
Yes.
Hmm.
Yeah. Yeah, yeah.
Okay.
So the overall economy is, I mean, I guess the point is that there's a more pronounced K shape that's emerging. Is that kind of what you're saying? Like now, is that?
It's a thesis. It's a thesis. I
Yeah.
actually don't know, Donnie, if I
Hmm.
subscribe to that thesis. We're seeing conflicting data. I'll give you two quick anecdotes. If you like, number one, like look at Chipotle. Like, if you look at, I'm just pulling up the stock now to make sure that I realize I'm like
I'm sure
live
it
on a
won't change. Yeah.
live on a podcast. But if you look at Chipotle's stock, like, yeah, they have not been doing well. They have not been doing well for a while, and Chipotle kind of skews towards suburban, mid to high income. Like they should be doing fine. But if you look at the cost of a burrito, it's up 50% over the last 3 years. So why aren't they doing well? Well, maybe they took too much price. Now look at Ross Stores. That company is appeals to the lower end person. That stock is doing very well. Well, that doesn't really align to the K-shaped economy thesis. Chipotle
Hmm.
is doing terribly, but Ross Stores is doing great. I don't get that. Well, maybe it has to do more with the fact that Ross didn't take a ton of price and Chipotle did. Maybe it's that simple. Maybe it's an inflation conversation rather than a K-shaped conversation.
Hmm.
So it's not obvious to me. The other thing is I presented this K-shaped thesis to the at the PCT Top 100. And when I was done, Jerry Galoff pulled me aside. We had a quick conversation about some of the things I talked about up there. Hey, this was great, blah, blah, blah. And then he was like, just to let you know, that slide that you gave on the K-shaped economy, we are not seeing that in Orkin. We are not currently seeing a K-shaped dynamic playing out at Orkin.
So that goes on to, well, we're
Well, was
kind of
he
going at
that?
it.
I need
But,
more context of that. Is he saying like, well, they're all
but,
struggling, or
but
they're doing great?
here's the
You know what
interesting thing. So
I
when you start, when I worked for a guy and we talked about there are rich bugs and poor bugs. Carpenter ants are rich bugs. Cockroaches are poor bugs. I got to believe that Rollins is more in the rich bug, market. So I wonder, like, you know, is he seeing what he's seeing because of the market that they're after, or is that, truly, at all levels, everybody's buying pest control? Because, we've always heard pest control is recession resistant, and man, 2007 and 8 proved it out. Because the whole world was going to hell in a handbasket and pest control was just fine. Well, we also had the bed bug pandemic right then and there. And I don't care whether you're, whatever your economic situation, if you and your family are getting bit up by bed bugs, you're going to pay, right? So that's kind of interesting.
I think that those are two really good points, Dan. Both of those points, I think, probably are why. Like, I talk to pest control companies that are very targeted with Donnie, you probably do this with your company, but like you target zip codes that, according to home values that are higher, like your sell-through rates are better, your ability to pass through pricing is better. Like there's a lot you can do if you target well, and I think Orkin has been doing that for a while. So maybe they skew towards that type of customer, but also, yeah, if pest control truly is non-discretionary, then it probably shouldn't be that impacted by a K-shaped dynamic. Like rich or poor, if you have a bug problem and you're not going to be able to handle it with some DIY product at Ace Hardware, like you gotta
Mhm.
make the phone call.
Mhm.
Well, I think the thing to keep in mind though, and as you're saying this, and I'm saying this more for our listeners than because you kind of mentioned this up front, which was when you think of a K-shaped curve, it's not a perfect K, right? If you can imagine that very top is a lot smaller than that bottom, which is why I asked. I would need more context. Was he saying we're seeing more consumers struggling, or we're seeing, or we're not seeing that at all? Because that would change that dynamic, right? And so when we talk about this K-shaped curve, that that bottom half might actually be getting bigger, right? Or vice versa. And so anyway, I just want to make that point because when you think of that, at least my mind goes to what a K looks like, which it's evenly split, right? And I don't, that's not the case here. It's just saying it just makes that curve. It's not necessarily even split that, well, half the people are doing better and half the people are not. It could be that 80% people are doing better and only 20% are doing better and
Mhm.
vice versa. So that's just an important point. So, um, anyway, I would say for me, Donnie's local economy, I think the bottom K is getting a little harder, right? Because I mean, we have seen the pricing pressure, and we've seen it, in cancellations. Now, we were in front of this just last year, and even this year, like we're seeing it more. Again, I am one data sample, so don't take what I'm saying as like gospel truth or that it's indicative of the market. Um, but we adjusted prices based on that, and we saw an immediate impact on cancel rates, especially in some of our areas where the demographic slants a little not quite as affluent. We saw
Yep.
an immediate impact on cancel rates by doing that. I am not suggesting if you're listening to this that you should lower your prices. I'm not saying that my
No, no,
experience
no.
is yours.
But Donnie, so the next topic that Tim and I were talking about, this is kind of interesting because you and I pounded the table,
Mhm.
raise your prices. All of our clients and friends and people, they did. And how much is too much? And I don't know. So Tim, talk about your observation with the 1970s and the price of food and things like that.
Yeah, thanks, Dan. I'm real glad that we're going to get to talk about this a little bit because it has implications on Rollins and but also like the rest of the pest control space as well. And also just going back to that K-shaped thing real quick, like I wonder what Jerry would say today because this was a couple months ago when we had that
Mhm.
conversation. Maybe he's would be noticing some of the things you're talking about, Dan. Uh, but anyway, on pricing, I think it's interesting. So if you go back from like 2000 to 2019, like basically 20 years heading into the pandemic, Rollins grew organically 4 to 5%, basically every quarter. You could set your watch to it. Like the very, very low end was 4, the very, very high end was 5, and they didn't really stray out of that zone for 20 years, organically. So excluding M&A.
Mm.
Except for the great financial crisis. But even then, they only slowed down a couple points. They were still positive through the great financial crisis. We cover 600 companies here at William Blair. And, yeah, I can count on two hands the number of companies that stayed positive organically through the GFC. I mean, that's why Rollins is so special, or one of the reasons why. But anyway, I digress. They grew 4 to 5% for 20 years, and about 1 point of that was price. So volumes were about 3 to 4%.
Mhm.
And now, post-pandemic, they're growing 7 to 8 for most of that those 6 years post-pandemic. They were growing 7 to 8 every quarter. That was inclusive of about 3 to 4 points of price. So,
But before you go on, when you say every quarter, you mean annualized every quarter, right?
I
No.
mean, if you look at their quarterly results, they were growing 7 to 8% year over year organically
And
over the
okay, right. Okay,
well,
good.
oh,
So you're
sorry,
not
yeah,
saying
year over
7% a
year,
quarter, right? Okay.
Right.
not
Just
sequentially. They were not.
clarifying.
Yes,
Yeah.
thank
Yeah,
you, Dan.
that's a 20% growth rate,
Yeah, I was
right?
going to go, I'll take
Yes.
that any all day. So,
Yeah, no, I'm talking all of these terms, by the way, I'm talking year over year. So when
mhm.
I say 4 to 5% year over year pre-pandemic, that was inclusive of 1 point of price and 3 to 4 points of volume. Post-pandemic, they were growing 7 to 8%. That was inclusive of 3 to 4 points of price. In other words, volumes were still 3 to 4 points. In other words, basically since 2000, volumes have been about 3 to 4 points. And the big difference in the organic growth rate that you've seen has been price. And so I do think that there are some questions about how sustainable that is, moving forward. Right now, it is true that we are in a different interest rate regime. We are in a world where there's a different cost of capital. And because of that, I think it does make sense that Rollins and other pest control companies have raised their prices. Everything else is more expensive. The rates at which banks, if you just go to like the very core of the economy, like the rates at which people borrow are more expensive, and that flows through to everything else in the economy. And so everything is more expensive. And so we are in a different cost capital regime. So it does make sense to me that pricing would be a little bit higher. But the question is like, how long does this last? Because don't forget, Rollins 7 to 8% target is inclusive of 3 to 4 points of price. What if price has to come down to 2 points? Then does that 7 to 8% target come down? Does that change everyone's perception? Because I will say there was a point at which in the late 1970s where everyone was raising prices accordingly to the change in the cost of capital. But there was a point in the early 80s, around 1983, where some companies got caught upside down because they were still raising prices the same way they had been the last 5 years, but the cost of capital had changed. Interest rates came back down. Inflation came down. And if you didn't respond with a different pricing strategy at that time,
Mhm.
you got smoked. And so that
Mhm.
it is something to be aware of here. Now we are entering the back half of 26 where it looks like we might be raising rates more and
Right.
inflation could be higher.
Mhm.
So I'm not saying that this is something that you need to be aware of for tomorrow, but it is something to be acutely aware of because I know you guys were beating the drum very loudly about pricing a couple years ago.
And listen, I don't think that was a wrong thing to do at the
Not
time
at all.
because
No.
labor was take. And by the way, this is not me justifying, but at the time, labor was a premium. Like remember, like you couldn't find anyone, and then folks you could find, they're like, well, I'm going to die, right? I mean, you're going to send me out. Like I'm, oh my gosh, this is terrible. So, and listen, there is an argument to be made. Do we do less and get paid more, or do we lower our prices and do more and get paid less and do it with volume? And listen, what I saw personally, my own little personal economy was that when we go way high in pricing, we see it on the back end in cancel rates, right? And so it's like, which one do you want more of? And I'm not pitching this as a dichotomy on either or, but I will tell you it is absolutely a correlate, right? You get on the gas of price increases, you're going to see it on cancels. I mean, it's going to happen. So anyway, enough of
But
I
the
have a
that.
question
question.
is, do you want to do more work for less money, as you
That's
said,
what
or
I'm saying.
less
That's exact.
work for
Yeah.
more money?
That's
So
and and that works so long as you can hold the cancel rate. But
yeah.
when that cancel rate starts slipping, you're like, oh gosh, wait a minute, right?
Mhm.
So anyway, Tim, you had a question. What was your
Yeah.
question?
Well, my question is like, how do you guys think about that then? Because when I am talking to companies who are thinking about selling, or I talk to private equity companies, or just anyone, we talk about the value drivers in this business. To me, the number one value driver of a pest control company is its retention rate, customer retention
Bam.
rate.
That 100%.
Because yes, I know that pricing has higher incremental margins than volume does. However, the cost of a or excuse me, the incremental margin on an existing customer is so much higher than the incremental margin on a new customer that it's
Mhm.
so much more valuable to just hold on to as many customers as possible, right? So if you come to me, you say, hey, if I keep my prices high, a lot of that flows through the bottom line. I'm sitting pretty. Maybe I'm willing to watch my customer attrition rate go up a little bit. I'm probably going to respond. I think that that's a bad idea in the long term.
That
Well, let
I
me
say it
ask
all
you
the
a
time.
question. Okay, so
Do
you
you
and I,
agree, Donnie? Sorry, Dan.
Well, real quick, here's what I'll tell you. I say it all the time. There is a point that you can efficiently go out of business. And what I mean by that is that you can make that margin so large that much like what you said is that now all of a sudden your cancer rate goes higher and everything that your perfect situation now is, you're losing customer year over year. So anyway, it's a good way to your point. I think price increases, you absolutely need to do them, but price increases to me are not nearly as valuable as stability of revenue and stability of your profit. And if I have to take one or the other, I'd rather take a lot more volume with a little less profit than a lot of profit with my volume going down. You know. So anyway, Dan, what were you going to say?
well, I was just going to say, so on the growth side, right? So, because we see that with valuations as well. The buyers say, well, if your attrition rate is higher, then you're not going to get the same multiple. But the dollars are different. Like just take door to door, right? They traditionally have high attrition rates, but they grow at humongous rates, right?
Right.
And so if I'm a door to door guy, yeah, maybe I won't get the same multiple, but I'm going to get a lot more money.
Mhm.
for my company.
Yeah, the base is higher.
Yeah,
Right.
but that but it's funny that you mentioned that, Tim, because I've been doing M&A for a while, and it used to be all about, I want to know about recurring revenue versus non-recurring revenue and EBITDA. Retention wasn't that important because most of the companies were growing. So but now, especially private equity, man, that's what we study. That's what it's all about, retention. How you doing? So you're
Oh, we
absolutely
splice the
right.
curves. We
Yeah.
splice the retention curves according to cohort and year. And what does year one retention look like versus year two versus year three? How does that compare to the strategic? Blah, blah, blah. Like, yeah,
It's a big
they
deal
get
now.
into it.
Yeah, yeah,
Yeah.
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 So,
No.
uh, okay,
Let's get to Rollins because we got to get wrapped up here, and I want to spend a little bit of time on what has happened over the past few months, and we're almost at the end here, and I really, really, really want to dig in this a little bit because listen, we're all Rollins fans here, by the way. I'm a Rollins fan. I compete with them, but listen,
I'm a Rollins fan. I'm a Road to
hun-
Kill fan.
yeah,
I'm a
exactly. I
fan
mean,
of
I love
all
them
of them.
all,
We
right?
gotta. That's
I'm not
So
allowed to
let,
be a fan. I have to
yeah,
be impartial.
yeah.
yes.
Exactly.
Right.
So let's talk about Rollins. They've been down over the past several months. We kind of talked about this to begin. We talked about the weather. You know, there's other issues, right? Consumer issues, digital shift, competition. I'm curious to hear your take on this, Tim. And I don't know that I'm going to ask you to give the causality, right? But more of like what is the driver, right? And again,
Yeah.
I mean, I'm looking at correlation, not necessarily causality. I'm not asking you to do that, but why now? Like, what do you think? What do you think are the drivers of what we're seeing?
It's such a good question, Donnie. So it's an easy answer, which is I don't know. But you know what? That is information
Yeah.
because if you don't, so I think that the reason that Rollins stock is down so much is not because they've been below their target for the last 3 quarters in a row, which is rare.
Hmm.
If I don't know that they've ever done that. Of course, they never really had a long-term target until Jerry and Ken took over. When it was the Gary Rollins days, they didn't give any guidance. They didn't give
Hmm.
anything. Gary
Hmm.
would say, not likely going to give anything anytime soon. Like he just didn't
Right.
really play that game. Then Ken came in and yeah, professionalized a lot of different things Ken and Jerry have. And one thing they did is give some guidance. It's like a long-term framework. They don't call it guidance. They call it a long-term framework for 7 to 8% organic growth at 30% incremental margins. And for the last 3 quarters, they've been below that 7 to 8%, more like high fives, high 5 to high 6% range. So not that far off, just down a tiny, tiny bit. But if you miss 3 quarters in a row and you're a high multiple stock, it makes sense that your stock comes down a little bit. But I think that the reason that the stock is down as much as it is isn't necessarily just because they've missed those 3 quarters in a row. I think it's because we can't explain it and they can't explain it. That's a
You know,
problem.
would you say, and you don't have to answer this, would you say that it's almost a self-induced error? Like it's setting expectations and not paying attention to. And by the way, you probably shouldn't answer that. I can say it. Why would you do that? Like to me, like I can say that. I mean, Dan, maybe you disagree, but it's like, why would you go and make a self-induced error? Like, hey, I mean, listen, everyone can make fun of Gary all you want, but there's a little wisdom in that, right? And you don't set expectations. There's no expectations there. And hey, 5%, damn, Rollins is just consistent as can be. Let's keep pumping money. Anyway, I know you can't say that, Tim. I'm not gonna,
Well,
but I mean,
priced
there
for
is wisdom there.
perfection. They were priced
Yeah.
for perfection based on those estimates, and but they're still a
But
terrific company that's
listen,
growing great, and their margins are good, and it's just a very, very well run business.
but think about it. I mean, like even with your kids, for example, you tell your kids, "Hey, we're going to go to McDonald's." You set that expectation, and then you show up at Hardee's. Right? We're in the South. You go to Hardee's, they're gonna be like, "What?" They're gonna be like, they're gonna be disappointed, right? They're like, "You said McDonald's, Dad."
I'll
Right?
take
Not that
Hardee's anytime, but
yeah, but my point here is like, why would you? I guess my point is this: is that I think I mean, I don't. I think Rollins is just as strong as they've ever been. I mean, I think that, again, we're all facing headwinds, and but big picture, they're a strong business, and there's not that much that's different. Only the perception, in my mind, that is different. And so again, I'm not a stock analyst. I'm not a smart dude. It's just I know psychology, and I know what happens when I do that with my kids, or even I do it with my spouse, or even with Dan. Sometimes, you got to be careful with the expectations that you set.
Well, you can't disappoint Dan. He'll make you feel it for a long, long time. So I would like to. I think there's a lot of wisdom in that, Donnie. So the number one complaint. So I've been covering Rollins for over a decade in the pest control industry. I've been very fortunate to do so. This is an amazing industry. For over a decade, the number one complaint that I've had from my clients, which are institutional investors, portfolio managers, hedge funds, pension funds, that kind of thing, the number one complaint I've gotten by a mile is it's too expensive. Not it's not a good company, or not in a good industry, or doesn't have good financial metrics. Everyone agrees it's an amazing company, an amazing industry with great metrics across the board, 25% ROIC. Who else does that year in and year out? It's crazy. It's too expensive. The thing is we're finally here at a period of time where it's not too expensive. Like, this should be the period of time where you realize that this isn't going to last forever. Take the short-termism of Wall Street out of this and realize this isn't a great company and a great industry. They're going to be just fine. And also, what are we talking about? Like, they're growing 6% organically.
Right.
That's fantastic.
On a multi-billion-dollar, right?
Like, okay, fine. They're not growing 7 to 8. They're not growing according to their target. They missed their target. Fine. But like, they are growing really well. It's a very healthy environment. Their digital leads were down a ton, and they still grew 6% in the quarter. That's fantastic. I challenge anyone else to be able to do something like that. So I agree with you. I don't think there's anything wrong. This is very normal for Wall Street. Like, I have very sophisticated clients that run, tens of billions of dollars at a hedge funds. And one of them called me last week, and he said, yeah, but Tim, the days of 7 to 8 are over. They are done printing 7 to 8. They are going to print 5 to 6 moving forward. And until they change their framework, if they continue to miss, then the stock won't work. And so they're playing kind of a different game. They're playing your Hardee's McDonald's game, Donnie, rather than the game that you and I and Dan are playing, which is stepping back and being like, boy, they're growing 6% organically. Everything seems fine to me. So it's kind of just, it's a different thing, right? The stock market versus, the real world,
the psychology of it. Yeah, exactly. So awesome. Well, Tim, it has been fantastic having you on as always. Dan, any parting thoughts before we finish out here?
No, always a very interesting conversation, and congratulations on the Pest Index. I think Tim and I were talking the day before Rollins announced. We were saying we're either going to be geniuses or we're going to be dogs.
we're geniuses for one more month, Dan.
One more. Oh, goodness. Well, just a reminder, all the resources and topics that we talked about today are going to be available on the podcast website. Just take a look at pnpindustryinsider.com. Take a look under show notes. And as always, we appreciate any positive ratings and reviews that you have, and any complaints we ask that you pass to Dan, because he loves a lot of negativity. And with that, we're all going to sign off. We'll see you next time. Take care.
Thank you. See you.
Bye now.